Customer journeys are everything. You need a simple customer journey as a mortgage advisor that you can follow. That means that you can create effectively the same process, the same experience for every single client that's coming through. And I think as new mortgage advisors, it's something that people get really stressed about, actually, to be honest, and they get really stressed about it. And so in this video today, what I'm going to do is break down a very simple customer journey that you can apply to your employed role. Self-employed roles doesn't really matter. Now, it works best obviously in a self-employed role because you have more your control over it. But if you have a predefined journey within your business already as a employed broker, or maybe you're a self-employed but under a firm, under an AR, then this can still apply. You can still make this fit, the basics of it. So we're going to break through them down. I'm not going to go into real big detail on each one, purely because that is my entire system that I coach. And so it would require hours and hours of deep dive to go through each individual one, but I'll give you a basic overview. And if you can apply the basic principles to it, you're going to be successful with your business with this. Okay. So the first one you have is pre-qualification. You need to make sure that any clients coming in to speak to you are being pre-qualified, period. Now, what that pre-qualification is, can be ranges of really, really deep to just literally initial call, but you need to have some sort of pre-qualification in there. The idea with this is that people are being screened, you know more about them. So when they come into the room and you speak to them for the first time, you are not just going, hey, tell me about your situation. You actually kind of understand a little bit about them beforehand. It does also mean later on down the line, it allows you to pick and choose if you get to the point where you're so busy you have to pick the best type of clients to work with. You're not there yet. As a new advisor, you won't be there. And to be honest with you, many long-term established advisors never really reach that point. But pre-qualification is vital. And if you miss the pre-qualification, you'll end up with a kind of people in your discovery call, which is the next stage, all clogging that up with time wasters. And this is how you end up spending a lot of time with people who aren't right for you. Which then brings us to the next point, which is discovery call, which I just mentioned. Now, the discovery call is where you should be sitting down with a client, ideally either on Zoom or face-to-face, not on a phone call. Phone doesn't hit right. And this is where you're learning about the client and you're learning about what they want. It's to see if it's a good fit. You're not trying to pitch your service. You're trying to see if, again, it's a good fit. You're trying to understand whether you would work well together and if you can help them. And at the end of that call, you ask them whether or not they would like to work with you or not, and then you close them down to become a client. That's what that should be there. No documents at that point. Documents should come afterwards. No promising them the world, none of that stuff. You just want it like that. It's a discovery call. From the discovery call, once that's taken place, it then moves into research. Now, research is where you would go and do those AIPs. Where you would go and look at documents. It's where you fill in the fact finds yourself or get the client to fill them in through portals, whatever you want to do. And you would build that out. You go back and forth. They might find a house. It's the whole main part of the job is the research bit. What house are they looking at? Does it work? What's the lenders? What's the process? That's the whole thing there. Now, that doesn't need to be a customer journey. That is a section on its own. So people, as in like, that is a category. People want to systemize and journey that bit. No, you can't. Humans do human stuff. Research is that phase. So that's where you'd run the AIPs. You would do those things. From there, once they found a house and you've picked a lender and you know what you're doing, you then move into the submission call. Now, submission call is where most mortgage advisors and firms fall short completely, because what they do is they don't do it. They just don't do it. It's kind of crazy, actually. And so what they do is they'll just go, yeah, cool, found the lender, I'll submit it. You don't want to do that. Submission call is you bring them on for another Zoom call or a face-to-face. Again, you need to see their face, so either Zoom or face-to-face, and you bring them in before the mortgage is submitted. So before they actually apply for the mortgage, you're having another call with them. And this is where you would do the protection conversation. This is where you would close the insurance and you would submit the whole thing together. Insurance and mortgage should all go as one. And if you split them, you are significantly reducing your conversion rates. So that's the next part of the customer journey. From there, then, you will then go back and forth with the lenders. So that's fine. The next part of the customer journey then would be the mortgage offer. So once the mortgage has been offered, you need to have some sort of contact with the client to talk through the mortgage offer. Now, you can do this via a video call. You can do this via a phone call. You could do this via like a Loom video, which I have a lot of my clients do, where they do like Loom recordings and go through them that way. But you need to go through the mortgage offer with them. And this is the point, at this point, where you would ask for a testimonial. You get the reviews at that point. From there, then, It then moves to completion, and completion is when they've moved in. And obviously when they move in, this is where you would probably call them about 2 or 3 days after completion. You would have hopefully sent them some form of gift, ideally a moving in card. That's normally the best one. And then you would send them, give them a call, just touch base with them, thank them for the business, thank them for being great clients, and that you wish that you had more clients like them. And if they know anybody, then please could they refer them your way who are like them, because you like working with people just like them. Flattery is a great thing. That's the point. That's the end of the client. At which point then your customer journey should go into some form of newsletter nurture sequence where they get an email from the client from you once a month that keeps you top of mind for the next 2 to 5 years until they are re-engaged again back into a remortgage kind of countdown, remortgage countdown when they're ready. And that's contact after the actual mortgage is completed. That is a customer journey. That's a very simple one that you should just be building those milestones and those kind of key moments in your journey. And I'd rather them be broad than be like granular. Obviously, when I work with people, the MBM, which is the Mortgage Business Mastery System, the MBM system is built to do all of these things in a very granular way. But for yourself, you literally can just follow this in a very simple way. If you apply those key milestones, knowing what you're trying to do, you will do well with it. Okay, so give that a go. Yeah, see how you get on. One of the biggest things though with this is staying organized enough to actually see these through. And I do see most advisors get very, very wrong with this, and they fall apart. And so I actually broke down my way of time blocking and how I stay organized and how my clients stay organized. This is a great one. You don't want to miss this. So go and check that one out. I'll put it on screen for you now.